You open your trading platform and see a massive option sweep light up on your screen. The volume is 10 times normal. The price starts moving fast. Your first instinct is to jump in. But most of the time, that move has already been priced in long before the sweep appeared. The real institutional activity rarely announces itself with fireworks. It moves quietly, often days or weeks, before the obvious flow shows up. The loud sweeps you see are frequently the last wave of positioning, not the first. This is why you keep missing the real institutional moves. Most traders are trained to react to what is visible. But institutions that move size do not want to be visible. They build positions gradually, using smaller orders, different accounts, and less obvious strikes. By the time a large sweep hits the tape, the smart money has often already established the bulk of its position at better prices. One study published in the Journal of Financial Economics in 2021 examined options order flow around earnings announcements. The researchers found that informed trading activity was highest in the days leading up to the event, not on the day of the large sweeps that retail traders usually notice. The visible flow was often the least informed portion of the activity. Your brain is wired to notice sudden changes. When a large trade appears, it triggers an immediate response, but that response is usually too late. The market has already begun adjusting. What looks like an opportunity is frequently the market's way of distributing risk to those who react emotionally to size. Another piece of research from the University of Chicago in 2022 looked at the relationship between option sweeps and subsequent price movement. The study showed that sweeps accompanied by high retail participation tended to underperform, while quieter accumulation periods showed stronger follow-through. The difference was not in the size of the trade, but in the timing and the noise surrounding it. This creates a difficult psychological problem. When you see nothing happening, it feels like you are missing something. When you see everything happening at once, it feels like you must act immediately. Both instincts work against you when trying to follow real institutional behavior. The traders who consistently catch institutional moves have learned to ignore the obvious and focus on the quiet. They watch for unusual activity in strikes and expirations that do not make headlines. They notice when volume increases gradually over several sessions rather than in a single dramatic sweep. They pay attention to what is not moving as much as what is. This approach requires a different kind of discipline. It means sitting through periods where nothing obvious is happening. It means watching other traders react to loud flow while you stay still. It means accepting that most of the best institutional activity will never appear as a single exciting alert on your screen. The market rewards patience with information that others overlook. The real moves are often already in motion before the crowd notices. By the time the sweep appears, the opportunity has usually shifted from entry to exit for those who were positioned early. Your job is not to catch the loudest trade. Your job is to understand what the loud trade is reacting to. The institutions that move first rarely make noise. The noise comes later, when others are trying to catch up. This is why you keep missing the real institutional moves. You are looking where the light is brightest instead of where the footprints are lightest.